Hey guys, in this video we're going to discuss the pivot points. This is probably one of my favourite indicators, if not the favourite indicator I like to use for me to establish potential slowdown areas in the market where we tend to see price stall, and it becomes very useful to find or to identify particular stop loss or take profit areas, for example. A pivot point is a technical analysis indicator, and we use it to determine the overall trend of the market over different time frames. I'm going to load it up just by clicking my navigator and dragging and dropping it on. This is an ex4 file that we're able to get over to you should you wish to use it by clicking OK, and our pivots have been generated. The pivot point itself, which is this grey line floating through the middle of my chart, is simply the average of the high, low and closing prices from the previous trading day. On the subsequent trading day, trading above the pivot is thought to indicate ongoing bullish sentiment, and trading below the pivot is thought to indicate ongoing bearish sentiment. The pivot point analysis as a whole is used in conjunction with calculating support and resistance levels, and unlike moving averages and oscillators, they are static, so they remain the same for this entire day period. So this is our UK pivot for this entire 24-hour period, and as you can see, the next day it drops slightly lower and then back up a bit higher. Data from the previous day's trading range is used as an input to generate other pivot levels, and we call these pivots above the UK pivot our resistance levels. So as I drag down, you'll be able to see R1, R2 and R3, which stands for resistance 1, 2 and 3, and 3 support lines below S1, S2 and S3. Traders may use these levels for assistance when seeking entries and exits and potential stop loss zones. And I like to use them as, just like we use our discretionary support and resistance levels, I kind of take these as mathematically based key levels, and we'll tend to see price stall when our candlesticks hit these levels time and time again, just as we can see here, literally bouncing off the UK pivot, breaking through our R1 level and then again stalling at our R2 for this particular day. Again here, price stalling up at this R1 level, a little bit of a stall here at the UK pivot, and again at this S1 level. Because price seems to respect these levels very frequently, the pivots become very useful in potentially seeing turning points in the market when price hits these key levels.